ASML has recently experienced a sell-off due to trade restrictions with China and lowering their guidance for 2025. Given ASML's unique market position and monopoly in the semiconductor market, this seems like a massive investment opportunity. The need for advanced circuits that can do billions of calculations per second has rapidly increased due to AI applications in particular. ASML has a near monopoly in the lithography business, particularly for extreme ultraviolet lithography systems, the crucial technology for producing cutting-edge chips. The semiconductor sector is feeling the ripple effects of AI's growth trajectory, which experts predict to reach a market size of over $3.6 trillion by 2034. This translates into more competent devices and services for end consumers. When analyzing the AI supply chain, ASML's position is ideal to benefit from this market growth. End users, which include both individuals and businesses, are driving the demand for AI-enabled products. The consumer desire for increasingly more AI adoption leads to higher demand for the next layer in the supply chain. With significant investments in the creation of large language models, generative AI, and other cutting-edge technologies, software and infrastructure providers such as Microsoft, Palantir, and Google are important participants in the AI ecosystem. These businesses need a lot of processing power. Chip designers such as NVIDIA, AMD, and Qualcomm are developing designs specifically for AI workloads. The competition among chip designers is fierce. While NVIDIA is currently leading in AI GPUs, AMD and Intel are vying for market share. Completely new approaches for new chips, such as quantum computing, for example, could also disrupt this market. Chipmakers are in charge of creating the processors that firms like AMD and NVIDIA develop. Taiwan Semiconductors and Samsung mostly dominate this segment. The last layer, and therefore the foundation for the AI supply chain, are the suppliers of chip manufacturing equipment. In addition to businesses like KLA Corporation, KLAC, Applied Materials, AMAT, and Lam Research, LRCX, that concentrate on process control, deposition, and etching technologies. This industry includes ASML. Several things set ASML apart from comparable companies. Because of its unparalleled dominance in EUV lithography, ASML has a distinct market position. Even though other equipment vendors are crucial to the chip production process, ASML has an almost incomparable competitive edge, since no one has been able to replicate its technological advancements. In contrast to the supply chain levels above, where several businesses provide comparable or overlapping goods and services, such as Microsoft versus Google versus Amazon in AI software, NVIDIA versus AMD in chip design, or TSMC versus Samsung in chip manufacturing. ASML works in a market where its closest competitors mostly provide complementary equipment rather than rivalry. By establishing a strong business strategy based on service and spare part agreements, ASML has also been able to reduce the cyclicality and lumpiness seen in the semiconductor industry successfully. For semiconductor manufacturers, these machines, which may cost up to $350 million each, are essential to their operations. Therefore, any interruption can lead to major production delays and monetary losses. In order to avoid this, ASML provides extensive service contracts that guarantee the machines will continue to run with little problems. These contracts give ASML steady, recurring income even when equipment sales are sluggish. I think we can all agree that ASML is a very high-quality company with a unique position in a very promising market. However, when investing, we should always also consider the current valuation to maximize future gains. The company is guiding revenue of 28 billion euros and a gross margin of 50.6% for 2024. Furthermore, they have a long-term guidance for 2025 and 2030. This guidance translates into a growth rate of 16% for 2025 and 8% per year for the period of 2026 to 2030. Management's expectations seem very realistic and achievable for the company, as experts expect the semiconductor market to grow at rates of 8 to 15% per year. Especially when considering that, as of now, ASML products are unmatched in the current market. This could lead to pricing power for ASML, further solidifying their growth prospects. This analysis gives us a fair value share price of $807 or 754 euros, indicating that the company could currently be undervalued by 21%. This analysis is based on the average of management's guidance for 2030. In summary, ASML is a fundamental component of the semiconductor and artificial intelligence sectors, and its supremacy in EUV lithography gives it an unmatched position in the AI supply chain. ASML's distinct position guarantees its stability and growth potential, whilst other semiconductor value chain segments are subject to intense competition and uncertainty. Our analysis shows that ASML could currently be undervalued by 21%. For investors looking for long-term exposure to the quickly growing AI and semiconductor businesses, ASML is a great investment. This is why I currently rate the company a strong buy. What's your perspective? Let's discuss in the comments below.